So you need to identify not only how much you need, but how much is coming in. And then you can start to think about that Social Security aspect. You can make a strategy shift or switch your claim as many times as need be. You could take your survivor benefit early. Let's say life has changed and you're no longer going to be working and you absolutely need that income. Now, I think you may be surprised that there's usually not one absolute answer that is right for you. Now, there are 567 different strategies to claim, and I know it is very confusing. And in this video, I want to share with you a couple of stories, the results from the study, and want to get to you those questions that you need to be asking. So let me share with you a couple of stories that will give you some sort of context in terms of the conversations we have with our clients and how you need to be thinking about this for yourself. So I just this week had a conversation with a woman who had called me in. She had been referred by a local accountant. And she said to me, I wanted to know when I should collect my Social Security. So I started asking her some questions. How old are you? What's your marital status? How much longer are you going to work? What kind of income are you bringing? And when we found out that she was, pretty much middle America, she had about $250,000 to $300,000 worth of total assets beyond the condo. She wanted to continue to work as much because she wanted to, also because she felt like she had to. Most importantly, she was single. And we'll share with you in just a few moments why that's really important. But for her, the answer was more personal than it was, if you will, about money. Because for her, it was all about the break-even point. And I'll talk about that with you in just a few moments. But there really was not a clear, well, you must take it at 67, which she was, or you must wait till 70 and get the delayed credits. It really was a personal decision for her. And she ended up saying, you know what, I'd really like to start taking the money now. So that was her conclusion. The second story has more of a, if you will, best answer, but it was missed when they were talking to their advisor about their Social Security. And this was an attorney who had retired a number of years ago. He was making good money, he's married, and he'd been collecting on his Social Security. But what he didn't realize and what his advisor didn't tell him was that his spouse was eligible to collect a spousal benefit. And when we were chit-chatting, he's not a client of mine, just an acquaintance. And when he found out, he went back to the advisor, and the advisor said he just didn't know. So I told this individual to go call Social Security Administration. And what he found out was, yes, his wife could have been, for the past several years, been collecting off of his work record as a spousal benefit. And he did start collecting, and he did get some past benefits. But here there was actually a wrong answer, or a misinformed answer in terms of which strategies to take, because he took his, but was unaware that he could bring in some other planning with regards to another tactic for Social Security, which was with regards to his spouse. So depending upon your circumstance, there may be a very clear choice in terms of which tactic to take, and sometimes maybe it's just a personal choice. So let's go into some of the very important questions I have to ask in terms of understanding more about their situation, which you should be asking yourself as well. So here are 7 questions that I think you must ask yourself to help to identify for you and your family the best strategy to take. The number 1 question: what income do you need? But not just what income do you need now, but also later. Because you need an inflation-adjusted amount for the rest of this next chapter in life, and you need to clearly identify that. Second question, what income is actually coming in? Are you getting a pension? Will you go and continue to work and get a part-time income? Do you have rental income? So you need to identify not only how much you need, but how much is coming in. And then you can start to think about that Social Security aspect. The number 3 question is, once you identify what you need and what Social Security will come in, you have to recognize whether or not that is enough for you. Because retirement and Social Security, or the date you retire, can be impacted based on how much income you need and how much is coming in. So based on what's coming in and what Social Security is available for you, you may make a decision to retire at a later date. But that's a question that you have to ask yourself to identify what's important to you. The number 4 question to ask, and it's very, very important, what is your health status? In other words, how long do you think you're expected to live? One of our 7 calculators that we have takes into account the fact that you may have a normal life expectancy, or maybe you're blessed with good genes, or maybe you're on the other side and you may know that you or feel that you're not going to live as long. And that can certainly impact which strategy to take. The number 5 question, and you heard me ask it with our first story, was, are you married? Are you single, widowed, divorced? This is very important because many of the strategies deal with switching tactics, moving from one stage or chapter of life into another. And there may be other opportunities to take advanced or more sophisticated strategies depending upon the answer to whether or not you're married. The number 6 question is whether you plan to continue to work, because this can have an impact not just on your cash flow, but on the final question. The number 7 question is, what will be the tax implications? We have another video here on the impact of taxes by taking Social Security early, if you want to learn more about that. So I'm now going to share with you the 5 answers to the question, or what are the most popular reasons people take Social Security early. And there really was a surprising answer. It was in number 5. So wait for it, because I'm telling you, it may be the most important message I can share with you in this video. Now, this was a study authored by Jeffrey Schmidt, CPA and author, where he was trying to understand, as he put out a survey on the internet, as to what the number 1 reason was why people took Social Security early. And the answer was that they were going to pass before the break-even point. 56% of the people responded in this way. And let me share with you what that means and some of the thinking behind this. So let me take you to the next slide. So the first line item is time versus money. Now, what do I mean by that? Some people just may value time more than they value money. They know that they're retiring now. They want to get the most out of what they're doing right now. They may not be able to enjoy life as much later on. So they want to get their income now that will help to fuel some of the bucket list items that they have on their list. The second item is, and that you need to understand this, that if you take your Social Security benefit at age 62 versus age 70, there's somewhere in the vicinity of a 75 to 77% increase in the amount that you could get at age 70 versus if you started at age 62. And that brings us to the break-even point, which I mentioned as the number 1 reason. Now, what I mean by that is the following. If you take your Social Security at 62 versus starting at taking it at age 70, that you must live to at least age 78 in order for that decision to have made sense. In other words, if you live past the age of 78, you would have been better off to have started your Social Security at 70 versus at 62. Because again, you're getting more checks earlier, but you're getting bigger checks later if you had waited. So again, the answer here is for people, they felt that they were going to pass before their break-even point. Now, as you take a look at the longevity charts, and charts typically show us living to, mid-80s, depending upon we're male or female, we're basically saying it's okay, or at least the studies show, it's okay that we're not maxing out our income later on because we want to enjoy the journey now. And it is not as much about the money as it is joy of the journey. And this was the underlying message with my first story with the single 67-year-old woman who basically was saying, I just want to take it now. I just want to enjoy it. She felt she was going to live longer. She wasn't married, didn't have kids or spouses to take care of. So for her, taking it at 67 was a decision she felt was in her best interest. The second reason people took Social Security early was because they needed the money. 15% of people did. Sometimes life hands us a deck of cards that says, no matter what the quote-unquote best answer would be from a pure financial planning perspective as we're planning for the future, if you need the money now and you've got no other choice, then sometimes you just take it. And I know this can get very confusing. As I said, there's 567 different choices to make. But in my new book, okay, Don't Outlive Your Money in Retirement, 7 Key Steps, we have a chapter available to you. If you go to our banner, I'll get you this chapter which gives you all the questions you need to be asking and all the situations you need to be thinking about with regards to your Social Security, so you can be a little bit more informed about making the right decision for you. I'm going to give you the other 3 answers right now, but remember, the most surprising answer was the 5th one, and you really need to stay tuned for this one because it really, I believe, can help to give you some real insight in terms of how you might be thinking about it and what may or may not be the right decision for you. The number 3 answer was personal health. 12% of people responded here. Personal health is a big question you need to deal with. There are numbers of different strategies that deal with whether or not the primary worker or the worker who earned more money has good or bad health, and therefore your decisions will be based on the health of that individual. So it's really important to determine what the health is so you can know which strategy to employ. The number 4 reason is Social Security is going bankrupt. 11% of the people responded by saying they're going to take Social Security early because they don't believe it's going to be around later. And in another video that we have, we talk about this very issue. So make sure that you take a look at whether or not Social Security is going to go bankrupt. I think you'll be surprised. And now let's go to the number 5 answer, which from my perspective was very surprising, where a lot of people are making mistakes that are very costly. Here it is. The number 5 reason was that people wanted to unlock their spousal benefits. And here only 6% of people responded with this answer. This is shocking, to be honest with you. If you are married, or if you were married and are now divorced or widowed, there are significant spousal, widow, or survivorship benefits that you must be aware of. And I think this is the biggest mistake that people who are not truly informed make about when they take their Social Security. Because many people will take it early at 62, but not understanding the impact it could potentially have. So in my 32 years of specializing in retirement planning, much of what we do with our clients has been geared around the planning itself and the money management. But in the past 6 or 7 years, we've really honed in on this aspect of the planning and the Social Security to really become a great resource for our clients. And I want to share with you a couple of stories because I think they're very informative in terms of where so many people are, even so many very well-educated, intelligent people who do very well in life who do not make good decisions when it comes to claiming their Social Security. Now, there are 567 different Social Security strategies, so I understand the problem. Most recently, I had a conversation, wasn't a client, just a friend, who's a doctor. Fairly well educated, right? And in his field, he's an expert. And he's been retired now for 5 years. And we were just chit-chatting a little bit. And I just mentioned to him off the top about, spousal benefits on Social Security. And he sort of went silent for a moment. And then we continued on with the conversation. And we spoke again a couple of weeks later. And he said to me, Mark, I called the Social Security office and I realized after talking with them that for the past 5 years, because of our circumstance, my spouse should have been collecting, if I'd done this right, her spousal benefit off of my work record. So I asked him whether or not he's working with an advisor, just curious. And he said he was. And to be honest with you, that's sort of the problem in our industry because most of the advisors or brokers or those who give counsel in this space typically really just deal with the money management. Some deal with some of the income and tax planning, but the Social Security piece, not so much. And fortunately for this individual, he could go back and collect 6 months prior, so he didn't lose the whole 5 years of income for his wife, just 4.5 years. And it amounted to a pretty good amount of money. But even if you are working in it with an advisor, and I find again, and I say this over and over again, I think our industry has done you wrong. We don't ask the right questions. We aren't finding for you that money that is on the table, earmarked for you, unless we really dive into, as we do with our clients and the 7 calculators that we have, to find a way to maximize your Social Security benefit. Now, United Income, and I'll share with you my screen now. United Income said that 96% of people take Social Security at the wrong time. The study went on to say that most people are better off waiting until 70 to claim, where 43% of adults actually are better off claiming before 70. And the big takeaway from the study, really important, by claiming at the right time, more than half of retirees would see income in their 70s and 80s rise by more than 25%. Now that can be a lot of money over the course of a lifetime. Some households could be leaving $200,000, $250,000 on the table. So I really want to dive into this. There's a couple of things I really need for you to understand before we get there, though. If you do take Social Security before your full retirement age, call it somewhere between 66 and 67, and you are still working, you need to be aware of the implications of doing that. And we have a couple of videos on our website that talk about that specifically. So go ahead and take a look at those if you have an interest. The other thing is, the answer for everybody is different. There's health considerations, age considerations, assets. Do you have retirement assets and or personal assets? How long are you working for? All of this has to come into play, and that's why we have the 7 calculators that we have for our clients. So for every one of you, there is not one boilerplate or templated answer for you. So you really have to do your homework and get somebody who can guide you through this process so you don't leave money behind. So the first reason to take Social Security at age 62 is if you have lost a job or you need income. Recent study has shown that upwards of 50% of people who have retired earlier than they wished to. And for many of them, health might have been the reason to compel them to retire. So one of the things to take a look at before you decide, depending upon your circumstance, to take it at age 62, your regular Social Security benefit, which may get upwards of almost a 30% haircut off of your full retirement age. And again, we've got videos on the site to help you with this. Go navigate them. But you may be eligible for a disability benefit versus taking a haircut for taking your benefit early. And the disability benefit will give you 100% of your full retirement age benefit. And then you may switch to your own work benefit at that point in time. So again, if you need the income, if it was a health-related issue, if you do qualify under the rules for disability to claim that strategy with Social Security, take the disability income first and early, and then switch. You actually get automatically switched at full retirement age, so you don't give up any money. The second reason to take Social Security at 62 is if you are single and you have health issues. So here's the deal. The question is, if you take it at 62 versus, let's say, your full retirement age and your full benefit is at age 67. If you waited to age 67, in other words, you didn't take the checks from age 62 to 67, but you got a higher amount from 67 on. The break-even analysis shows you have to live to somewhere around the age of 78 or 79 to break even. So if you're 62 and you don't think you're going to make it to 78 or 79, you're better off taking the money earlier. Why wait? Because again, if you waited 5 years to age 67, you're not going to get as much money over your shortened life expectancy if that is the case. So if you are single, and if you have health issues that could impact your longevity, you might want to consider taking Social Security at age 62. So obviously we're talking about getting prepared for retirement. So the question is, are you prepared? So in our banner, I do have for you a quick 2-minute quiz. Very easy. Once you complete the quiz, we'll score it for you, give you which one of the 3 stages of retirement you are in, which will give you some clarity about how well prepared you are. And also, I'll give you a free first chapter of my new book, Don't Outlive Your Money in Retirement, along with a couple of worksheets that will really help you get started to prepare for this new chapter of life. Reason number 3 to take Social Security at age 62 may be if you're eligible for a survivor benefit. So let me take you to my screen for just a minute. So depending upon what your work record is and what your full retirement age benefit is, you may be better off taking the survivor benefit early and then switching at age 70 to your own work record. So here are the numbers. Let's assume your full retirement age benefit is $1,500, but your survivor benefit is $1,750. You could take your regular benefit off of your full retirement age and you would get $1,050. Or you could take your survivor benefit early and with a little bit of a haircut, you'd end up with actually more money, $1,394. So let's say at age 62, you took the $1,394 and then you waited till age 70 and switched to your own benefit, which would then give you about $1,860 in benefits, plus any cost of living available. So that's one scenario where you may want to take a look at taking your benefit early. It may make sense to you, and the other thing that you have to understand is And this is very important to remember. And I've talked to too many people who don't understand this. You can make a strategy shift or switch your claim as many times as need be. You could take your survivor benefit early and then take your own. You could take a spousal benefit, then take your own, and then your own spouse may die and you may end up with a survivor benefit. You are eligible for different claiming strategies. You can only take one at a time, but we recommend taking the greatest amount each time. And again, that's where the calculators come into play. The fifth reason, final one, are spousal issues. And here is where I find that most people make their big mistakes. They don't understand the impact sometimes of taking it early versus taking it later. Our industry, again, talks a lot about shifting it so you take it later, but particularly with some spousal issues, some strategies of advanced planning, you may be better off to take it earlier. So let's address a couple of those. So first of all, if your spouse is younger than you and has lower earnings, that probably, we don't know this, but just on actuarial tables, they'll outlive you. So they may be better off taking their spousal benefit early, and then they'll be eligible for your survivor benefit later based on your work record when you pass at a later point in time. Again, switching. You can claim one strategy now and one strategy later. We don't know exactly how things are going to work out, right? We're just sort of playing the probabilities here, working through the planning. And then you have to make a personal choice in terms of what you think is right for you and your family. The flip side of that is if your spouse is younger than you but has health issues, and it may be that that individual may not outlive you. This is actually a scenario where you want to delay taking your benefit because you're going to outlive your spouse and you're going to need more money later on. So don't take the haircut early on and take it at 62 here. One thing to remember, very important here as we go through the planning and you think about what do I need now? What do I need later? The spousal benefit will accrue and grow if you defer it up to their full retirement age. Beyond full retirement age, there's no more growing the benefit. Versus the survivor benefit, it can continue to grow and defer till age 70. And again, we've got a couple of videos here on the channel that will help to inform you more about that. But as you can see, a lot of this, there's no tried and true absolute answer for you, but I want to break through some of the myths that are out there and say, you know what, sometimes it is better to take it later, sometimes earlier. We just showed you some of those, but a lot of it has to deal with health issues, age, assets, need, income need, etc., family. So really make sure that you've got some guidance with you. Deal with the calculators to get good answers for you. And this is what the whole 7-step process is that we take our clients through. Before we go any further, I really want to emphasize that Social Security is just part of an overall income plan that you must prepare for as you enter into that next chapter of life. We call it the income faucet, the ability to have different streams of income coming in at different times. And that really can help you to feel much more confident as you enter into retirement and go to pursue your goals. We really do believe you've worked hard for it, and I really want to help you to enjoy it. So let's talk for a moment about this, and let me take you to my screen. Now, United Income Study published a study a couple of years ago that indicated the following: that 96% of retirees choose the wrong year to tap into their Social Security, and that most people are better off waiting until age 70 to claim. Yet 43% of adults actually were better off claiming before 70. The big takeaway from the study? By claiming at the right time, more than half of retirees would see their income in their 70s and 80s rise by more than 25%. This is just one important element, and the fact that so many people make this mistake, this is where I think the planning really comes into play. And this is why we have 7 different calculators for our clients. It's really important not to leave money on the table. So getting your benefits at age 62. Social Security will tell you that somewhere in the vicinity of about 35% plus or minus of people take Social Security as early as they can, which is age 62. And most financial advisors, if they even are understanding the ins and outs and complexities of Social Security, and to be honest with you, most don't, that they would tell you that it's not a good idea to take it at age 62. So let me just sort of turn that on its head for a moment. And for some, and we did put out a video recently, 5 reasons to take Social Security at age 62. You should take a look at that. But a couple of those reasons were, let's say life has changed and you're no longer going to be working and you absolutely need that income. Let's say there's a health situation for you or your spouse and you need to make a shift in your lifestyle. Or maybe you have to leave the workplace and take care of an elder parent. These are just some of the reasons why it might be okay to take it at 62. On the flip side, if you do take it at age 62 and you're still working, you should take a look at my other video talking about the taxation of and the earning limits of Social Security by taking it at age 62 if you're still working before full retirement age. So you really have to weigh the pros and cons here. So the real question is, are you prepared? Do you know which of these strategies to take? Can I suggest you take 2 minutes? Go up to our banner, invest in yourself by putting the answers into our quiz, and I will get back to you and score that quiz for you and tell you which of the 3 retirement preparedness stages you are in. I'll also send you a free chapter of my new book, which is Don't Outlive Your Money in Retirement, 7 Key Steps. And along with that, I'll send you a couple of worksheets to help you get some real clarification as to where you are and whether or not you're on track for the retirement that you deserve. So some may not get their benefit right at age 62. So you won't get benefits at age 62 because Social Security requires you to be 62 for a full calendar month before you are eligible to receive a check. So let's take a look at an example. Let's say you were born on May 10th. You must be 62 for a full calendar month or the month of June, and then you'll be eligible to receive money on July 1st. Now here's part of this strange and confusing rule, okay? What is your actual birth date? Well, according to Social Security, your actual birth date for calculations is the day before. So if you were born on May 10th, then according to Social Security, your birth date is May 9th. And you're still eligible for money on July 1st. So the really tricky part of this particular rule is if you were born on the first or the second day of the month. So if you were born on the first of the month, then Social Security will calculate your birthday as the day before. So if it was May 1st was your actual birthday, Social Security is going to calculate it as of April 30th. And the benefit to you is you have all of the calendar month of May to be fully 62, and you actually get money on June 1st, not July 1st, like the person who was born on the 10th. Now, if you were born on the 2nd, the same holds true, right? So if you were born on the 2nd, your birth date, according to Social Security, is the 1st. You have the whole month of May to be 62, and then you're eligible for your first check on June 1st, not July. That's good news. But how much money will you actually receive? So we tell people, for the most part, if their full retirement age is age 67, and they expect their primary insurance amount, the PIA, and you can check out the basics of Social Security in another video that we have here on the channel. But if your full retirement age is 67, then you'll take a 70% reduction in your benefit if you started at age 62. But here's an interesting part about this day before rule. How much will you receive? If your full retirement age is 67, then anyone born on the 2nd of the month will get actually 70% of their primary insurance amount, or their PIA. Everyone else will get 70.4%. That's a nice upside surprise, but it's still confusing and strange, isn't it? And there's a lot of these kinds of rules in the Social Security system, and that's why I'm here for you. If you want to take a look at our playlist of all the Social Security videos, you can take a look at them here.